How's it going out there? It's Tuesday, March 17th. And I'm Frank Curzio, it's the Wall Street Podcast. We break the headlines and tell you what's really moving these markets. So today's Tuesday. You guys know I do my podcast, Wall Street Podcast, Wednesday. We're still going to have a Wednesday podcast. So this is a special broadcast, not because it's St. Patrick's Day. It's special because it's an interview with Michel Amar, CEO of DigiPower X, which I know so many of you, especially the freebies on Twitter, are looking forward to listening to. So this is a company we recommended 15 months ago, $1.65 in our Curzio AI newsletter, trading whatever, $240, $250 today. I know Michel personally. I've been to his house 3 times just for one-on-one meetings, not like I went there for parties or anything, because I really love this story. I want to know more about it, and that's kind of research we do, to boots on the ground. I've traveled everywhere over the world to find the best stories for my subscribers. And over the past 15 months, the stock has been volatile. They changed their business model from mining Bitcoin to AI infrastructure provider. That's why I put in our AI newsletter. Since they own close to 200 megawatts of total power, I believe 100's online, which is worth, if you're looking at Bitcoin mining, around 1 million. That's called tier 1. But it's worth 10 to 15 times that when converted to tier 3, which is AI infrastructure. That's what the company is doing. One of the first to do it as a Bitcoin miner. Over 2 years ago, they started this transition. So the volatility was especially crazy last week after the CEO announced the formation of a new company called US Data Centers, USDC, which will be used to deploy AI infrastructure to DGXX and the rest of the world, including hyperscalers. So it's going to leave DGXX as a pure play on power generation, digital energy infrastructure. And just to set this interview up, for those who haven't been following, DGXX was close to $3 a share last week when they released this news. And this is late last week. They released the news on Friday. But then a firestorm started on Twitter after some believed the formation of this new entity, USDC, was taking out the best part of DGXX. Shareholders thought they were getting diluted, but it's a separate entity that would be mostly owned by insiders. And they basically thought the common shareholders were getting screwed. So the stock, after the news, I think initially went up, but then turned negative after everyone on Twitter started going crazy, and it fell 20% in the day. And next thing I know, I was being labeled a pump and dumper. I'm an a-hole, piece of shit. And in these tweets, some followers are tagging the SEC, saying they should launch an investigation on me because I pump a dump scheme. And the funny thing is, I was at Busch Gardens on Friday with my 15-year-old daughter taking a rare vacation day. I don't know if you're familiar with Busch Gardens, it's a roller coaster park where you have to put everything in your locker, including your phone. And phone was in a locker all day to about 1:30. We got there early and went on a bunch of roller coasters. And when we went to go to lunch around 1:30, I took my phone, picked it up, and bam, all these freaking, everyone going crazy. I'm like, what the hell's happening? A few things here. One is, I do get why you're so mad. And at the beginning, I was posting on Twitter, you get really pissed, right? You get defensive. I'm like, what the hell? I'm providing free information to you guys and everything like that. But you know, when you calm down a little bit, you get it. You know, I put out a short video on DGXX on Thursday saying the stock has huge upside potential, which Michel liked on Twitter, by the way. And then they came out with the news the next day and the stock fell 20%. So, you know, I could see some people saying, well, that looks bad, consider I haven't really talked about DGXX on Twitter much in the past month or two, but here's a story you need to know. We did a live broadcast on Wall Street Unplugged on Wednesday. We're starting to do that every month, and that just happened to fall in that month, which was a Q&A format. So we get great questions. There's about 6 or 7 great questions. One of them were on DGXX, and I told my team and said, hey, you know what? Create these short videos and put them out, and DGXX, that was pretty good. We put it out. We just have to put it out Thursday. For those who say I haven't talked in the company forever, is because you're a freebie. You're on Twitter. Okay, so this stock is in my Curzio AI newsletter. They get updates several times a month. We have a special paid podcast called Wall Street Unplugged Premium every Thursday. It's $10 a month. Jesus, she's charging a lot more for that because it includes a trading portfolio where I talk about DGX a ton over the past few months. Second, I have not sold a share. In fact, I added more yesterday after sending an alert to my subscribers to do the same on this pullback. And after this interview with Michel, you're going to know why exactly I added to my position. So without further ado, here's my interview with Michel. Michel, so I think the past few days, pretty tough for us, mostly because you launched a new company called US Data Centers, USDC, which would be spun out of DGXX, and shareholders, including me, were a little confused when you first issued a press release on Friday. But yesterday you came out with another press release explaining exactly why you launched this company. And based on the stock pushing higher, I'm pretty sure most investors understood the news a little better, but you still have some questions. And I wanted to start with this straight out of the bat. USDC, what was the reason why you launched this company, and how does it benefit shareholders in DGXX?
Good morning, Frank. Talking to you out of GTC NVIDIA conference in San Francisco, so I'm outside. Don't mind the environment. But let me give you a little bit of background on the initial inception of US Data Center Inc. So about 50 weeks ago, that's not a long time ago, DigiHost at the time was a $35 million market cap company, Bitcoin mining company, with basically no interest from anyone and basically no cash, very little cash. And I came up with few ideas at the time, change the name of the company to a DigiPower X, and kind of segmenting ourselves a little bit far away from Bitcoin mining and more into the power industry. We announced last year in February 2025 the formation of US Data Center Inc. as a standalone business. So just to make sure that it was not a surprise last week when we announced the future of US Data Center, it was pre-announced over a year ago. And we went from no cash, $35 million market cap, 50 weeks later with $80 million cash, $160 million today in market cap, which is low for us.
Mm-hmm.
$15 million of capex that we just invested in 2026 alone and paid no debts whatsoever. So the idea, to go back to your question, the idea of US Data Center was to build a turnkey modular system, a piece of equipment that we use to build our data center as DigiPower X. Now, when we build a data center at DigiPower X, we need a multitude of equipment. We need transformers, we need switch gears, we need substations, we need supply of electricity, we need racks systems or container systems if we are not doing it in a building. So the US Data Center was answering a need in the market to have a flexible, small-scale modular system to serve Bitcoin miners or people who don't have the capital to build a campus that costs billions of dollars.
Mm-hmm.
That was the purpose of that subsidiary. And the reason why we branched out that subsidiary is because inside DigiPower X, it has zero value. It's invisible. We're not getting paid for a future business. US Data Center has zero assets today. They don't own sites. They don't own pods. They own an idea that we want to develop into a business. And to develop that standalone business require a lot of capital. And I'll give you an example right now. We developed that first pod under the umbrella of DigiPower X. And DigiPower X got the first pod that he paid for. So the first pod that's been commissioned now in Alabama has been financed and paid fully by DigiPower X.
Mm-hmm.
US Data Center does not own anything from that pod, does not collect any license fee, nothing. And We got the prototype. Now we can expand and sell this modular system, that piece of equipment, globally to other Bitcoin miners, to competitors, basically, of Bitcoin miners. And to do so, we need to hire and raise tons of capital. It's a relatively low margin business. If you get an order, I gave you an example of 100 megawatts from a Bitcoin miner that's up there. That would be basically a $250, $300 million capex to invest. Am I going to dilute DigiPower X and risk the capital needed for developing our GPU as a service or the build of our data center? Of course not. That would be irresponsible. So you separate US data center, you get your own capital, you raise your own capital, you separate the expenses, the sales force team, the service after sale, you separate all this payroll, this expenses to develop that business that require a lot of capital, and you take it out of the risk of DigiPower X. And therefore, now DigiPower X, who owns the majority of that entity, gets only the upside. There's no downside to DigiPower X. What happened if I buy 100 modular system and it never came in? The boat sink. We are out of business with DigiPower X. So I'm protecting, it's a shield. I'm protecting DigiPower X from any risk of diluting the shareholders of DigiPower X and diluting our cash. We have to preserve our cash. We have no debts. We have one of the best balance sheets out there, because when I look at every other companies, plenty of debt, plenty of leverage. We have zero leverage. We are in very good shape. So that was the reason we separated US data center from DigiPower X in visibility within our company, cap-wise, and mitigating the risk, zero risk for DigiPower X. And all the capital intensive required to develop that business has to be funded standalone.
So let me ask you this. I think people will better understand it. We know tier 1 megawatt, say if it's worth $1 million, and if you transition to AI, which is tier 3, anywhere from $10 to $15 million. Say that as you're transitioning, how much does it cost? So we know what it's worth, $10 to $15 million, but how much does it cost to build that, would you say, in terms of per megawatt?
I would say for us, around $5.5 million a megawatt.
Okay, which is fine. I think a good example of this, and why I love what you did here, is we look at Oracle, and I had Oracle on the books as well. We did very well with it, and they came out and said they signed, I think it was $400 billion in revenue, which they call remaining performance obligations, which is backlog. It was a 400% increase quarter over quarter. For a large company, it's insane. You can't believe it, right? The stock went up 30% in one day. The stock went from low 200s into the 300s, but then it got cut in half because everyone started realizing that, okay, this isn't software where you just give out a password and you generate money. They have to actually build the data centers, and everyone was like, how are they going to raise the money? And then once they found that out, that's when the stock got crushed, right? It got cut in half because they had to raise $50 billion. How are they going to do it? Are the hyperscalers still going to spend during this time frame? And to me, when you see that playbook, for me, when you spun this out and saying, hey, instead of doing that with DGXX, I think people under the impression like, oh, these megawatts are just worth, the 200 megawatts at your full capacity, say 100 that are online right now, and you times that by 10 million, whatever, you have $1 billion valuation with whatever your market cap is today, 120, 125 million, whatever it is. The cost to do that means that you have to get the money someplace. You have to raise money through bonds. You have to do it through equity. You have to dilute shareholders. And you found a way to spin off something that had zero assets in it, that you're also able to maintain. It seems to me that the great partners, great people that you just signed, right, to your company, superstars, and now you're able to raise money, and you're not Dilute. I want to make this clear. So with DGXX shareholders, they're not going to see any dilution of this, right?
Zero dilution, and that's the purpose of this standalone entity. So now you made a good statement. That co-founder, Hans Wetzberg, I think got paid from Verizon a year ago about $24 million a year.
Yep, 24. Mm-hmm.
Okay. So now I'm taking a guy that's worth $24 million a year, and I'm getting him in a new venture where DigiPower X is a majority shareholder, where we have a chance to raise capital from institutions, because just remember, he's on the board of BlackRock, is connected to every top CEO in the country.
Mm-hmm.
We have a top 100 CEO co-founding this venture with us. We have a real chance to have a pure play in a piece of equipment. Now, customers would not deal with a confused DigiPower X that was a Bitcoin miner and now pivoting to AI, but still waiting for the first AI revenues, and give us credit to buy a piece of equipment. So by being a standalone company, we have a clean slate. We can start clean. We have no Bitcoin background. We can go to institutions. It's a pure play. We have the right people. And the right people, and I know it was a concern from the shareholders, the right people need to be motivated. You have to remember that the people that got allocated shares, the co-founders, they are not getting any cash. We're not giving any cash to any co-founder equity motivated founders. We're not giving any cash. They're only going to get one day compensated through their equity if it works.
Mm-hmm.
But if it works, it's going to work for DigiPower X as well. So that business has big potential. And our view is that eventually we would like to take it public, if we can, to raise enough capital to finance the growth of that business. You have to remember, it's very, very high capital intensive. But if we do a successful offering and the market cap gets to a couple $100 million, $500 million, DigiPower X gets direct positive upside to our market cap.
Mm-hmm.
I would like also to add, and I think that's important, I believe I'm the largest shareholder of DigiPower X. And I want to remind everyone that in 2016-17, privately, before we went public, I invested about $8 million of my own personal funds. I never sold a share. Since we are public, since 2020, when it was, we got public a couple of weeks before COVID, and I never sold a share. I always kept myself in the company and a believer for long term. Okay, when we raised money back in November from the institutions, and it's how we diluted a little bit of shares, I sold shares at $6.20 a share, $6.20 a share.
Mm-hmm.
So I think that we did a tremendous job in 52 weeks. We went from a low market cap, below $1 stock price, with no future, basically, a Bitcoin mining a company with no interest, no future, no cash, to a company today, 52 weeks later, that has cash, that has a market cap that's 5x greater, that has a story that is happening as we speak. I was in Alabama last week, and I saw the tremendous work that we did over there. We have a site that's incredible. And I want to reassure the shareholders that everything we do or we did belongs to DigiPower X 100%.
Mm-hmm.
All DigiPower did was developing through our management a prototype, the ARMS 200. That prototype belongs to 100% to DigiPower X. And we want to commercialize, manufacture, and distribute globally that prototype on the US data centers because it requires too much capital and too much human resources to do it on the DigiPower X. Besides the fact that we have it's invisible inside our company. We are not getting any valuation.
Yes.
So I'll recap again. US data center has 0 assets. They don't own sites. They don't even own pods. They own an idea, and we're going to take that idea and commercialize it and create a business and value for the shareholders of DigiPower X. That's the idea of that standalone company.
And this is with Hans Vestberg, a former CEO of Verizon. You're right, $24 million in annual compensation 2024. Even if you look back, it's around $20 million annually, right? So you have a person that is actively within your company now, not someone that's just on the side doing nothing. Probably has a Rolodex of AI infrastructure investors bigger than KKR and Citadel. You're also locking in as an advisor. It's the board member from BlackRock. For those of you not familiar, BlackRock is the king of the world, 13 trillion assets under management, investors in every publicly traded company on the planet, including every major tier one AI hyperscaler, right? Which they probably have direct line to. So, having these people and locking them in this way without having to pay them probably $30 million plus in compensation with the $80 million balance sheet, no debt, and being able to having to raise money to actually fund this thing. I thought this was very creative by you in how you did this. And I understand, there's a lot of pushback because there's a lot behind this. And I think that's why I wanted to do an interview with you. People wanted to hear from you because there's a lot of moving parts here. But when you see the outcome, what I see is someone that's looking long term, that created a structure to lock in 2 superstars that can help you raise money tremendously. You have a vehicle now that you're not going to have to dilute because people don't understand the cost. They just look, oh, this is how much the revenue generated. So this company should be a $2 billion valuation, $3 billion valuation, when it actually cost a lot of money to build this stuff, which Oracle found out the hard way. And that stock got crushed, right? Now they raised the money. I think Oracle's are screaming buy because they're not going to stop spending anytime soon, what we saw the past quarters. And that's my next question to you. What are the next steps here? Because I know you're in the loop. You're at these conferences. Everyone that I know, and I covered this sector for many years now, anyone who has megawatts, pretty much more than 25 megawatts plus, they don't even have to go and seek the hyperscalers. The hyperscalers are seeking them because there's a massive energy crisis and they're in dire need of power. We're not even modeling for agentic AI. We're not modeling for robots and the amount of energy that we're going to use. We're still modeling on large language models, which is much less energy. How is your conversations going? What can you say about that? You're a publicly traded company, but to me, doing this model suggests to me that the meetings you're in, these people are really ready to sign up because we know what happens to your competitors when they see a tier one hyperscaler sign up to them. It re-rates and the stock absolutely surges because now you have big money behind them. What's the conversations like, if you could talk about, and what's the next step in this growth for you?
So the consensus, and I got very good meetings this next 3 days, but the consensus is that there's much more demand today than supply in power infrastructure, 100%. And we have a lot of action. It's about making the right co-location deal or developing our own GPU as a service, which we should be live in a few weeks from now with our first initial GPU as a service. And that's a very important step for us because we bought the GPUs, the B200, B300 from NVIDIA, bought the servers. They are actually be tested as we speak. Then they will be plugged in our infrastructure. and then we can run GPU as a service and start to get revenues. Now, the day we get revenues in AI, we are in business. And being in business makes it a big difference from trying to be in business in the AI. And I think that historically, if you look at all the companies that converted themselves, like Applied Digital and Iron, when they converted themselves from a story to actually data processing GPUs, their market cap blew up. And we are very, very close to be a player in the AI and convert all our megawatt to AI. So I want to reiterate that the allocation of capital that we have, which is a lot for us historically, but not a lot when you are in the AI business. We have to leverage that capital to be able to develop our core business, which is GPU as a service, power infrastructure. That's what we are. That's what we want to be. We want to have two streams of revenues: co-location, GPU as a service. And it's exactly what we are doing now. And of course, we don't want to be distracted with other type of businesses. However, we don't want to not get the opportunity to get upside from other businesses like US data center. Like, to go back to Hans Wetzberg, I could never motivate him to come into DigiPower X. It would cost us too much money. That would be a major mistake for us. But on a new venture, being motivated and having access to institutional money is very important to finance an equipment, a turnkey equipment. So we're in a very great position. After 1 year of announcing that pivot, we're actually starting the pivot. There's a lot of interest, and I have no doubt that every GPU that we set up in our infrastructure is sold. No doubt. It's sold. So all we have to do now is to allocate the capital and leverage it the best way and preserving as much as we can dilution and grow the GPU as a service. And that's our mission for the next 5-10 years. Very narrow mission.
We got some questions on updates with Alabama. Also, I saw a very favorable article from North Carolina, and that's like your next step, right, of bringing on another 100 megawatts of power. But the article was very good. It says that Hill and DeBrand, which is North Carolina, updates zoning rules. AI data center proposal moves forward, and it talks about adding jobs. Because North Carolina is a big hub, but talk about that, how's Alabama going? How's North Carolina going? It seems like everything's coming together as well as everything that we talked about so far, but I think we got some questions on that as well.
So couple updates, important updates that happened in the recent weeks. We got the load study in New York on the power plant of 60 megawatts, and we waited 3 years for that. In North Carolina, we got the zoning approved. Took us a year to get the zoning so we can have a data center in North Carolina, very close to the Google North Carolina site. So that's a very good positive news that unleash another 200 megawatt worth of future power. That's for the pipeline of 28, 29, 30. Alabama was there last week, an incredible site. We just entered into a contract to buy an additional 33 acres, very low price, adjacent to our property. So now we have about 55 acres in Alabama. So we have it's a beautiful site, Alabama. 55 acres, 70 megawatts. We're going to be running next month our first GPU as a service rental. So we're very excited about Alabama.
That's cool.
New York, very exciting. We got the 60 megawatt load study back. So now in the gas combined cycle power plant that we own fully, and by the way, is worth much more than it used to be 2 years ago. The power plant's valuation went up dramatically. Okay, we have a 63 megawatt generator combined cycle. It's value at least at $1 million a megawatt. At least that's more than that. But on that power plant, we got also 60 megawatt of clean power, hydropower from the grid, granted after 3 years. So we're in very good shape in New York. All our sites, people have accepted our pivot to AI. It's all a matter of execution now. Focus on execution on converting our megawatt power from Bitcoin to AI. Our view is that by 2027, we won't mine Bitcoin at all. We will be a pure play AI generating business.
And if that's the case, will you sell some of the Bitcoin on your balance sheet? I know that's included $80 million in cash, right? And Ethereum as well?
Yeah, so we have about 155 Bitcoin, I believe, and 1,000 Ethereum. And we're just going to keep it long term and not worry about it. And if Bitcoin goes up, we have an upside. On the DigiPower X, we are still correlated with the Bitcoin price. Bitcoin goes up, we tend to go up. It goes down, we tend to go down. But I believe long term, it's still a good digital asset, and we're just going to set it aside and not worry about it. And we'll get the upside when it recovers and goes up.
You brought up a good point where you're trading kind of similar to Bitcoin. When does that change? Is it when you announce a partner because you have a lot of catalysts coming up? Because when I look at your company and I compare it to valuations of competitors like Mara, Core Scientific, Riot, CleanSpark, Bit Digital, Northern Data Group, again, looking at these companies, when I see their valuation compared to yours and their balance sheets aren't as strong as yours, their valuations are at least 5 times higher than yours right now. Is that going to change? You see the re-rate after you announce maybe, a tier 1 customer once you get this going? And I guess, is that when you feel like you won't be trading so much as to the Bitcoin price, where that's the transition when you see Bitcoin into AI data centers?
Yes, I believe that as soon as we actually process data next month and we get AI revenues, we become a different profile. Now we become credible in the AI industry, then everything trickles down to more business, more revenues, projections can be more predictable. So it's a very important corner of DigiPower X next month. As soon as we print, then we copy and paste and we grow that business. And I really want to assure the shareholders that every dollar is allocated properly in our business. To really respond to the concerns of shareholders about US data center, believing that they are missing out, the missing out factor. They are not missing out anything. I would not be able to handle both businesses today: GPU as a service and building a data center and launching some equipment and try to sell it to other parties. I will not be able to do it. So by taking it on a standalone and getting the majority of the shares, I get the upside without jeopardizing our core business, which is developing the data center, processing data, AI. So I think we are in a very, very great spot. We got interest from all the institutions. They're all waiting on the sideline to see our execution. So the execution risk goes down to basically zero.
Mhm.
And you have to remember that we've been involved with every major institution. And they will jump on our company as soon as they see the execution happening. And we are there. It's a few weeks away from there. So I'm very confident to respond to your question about how's the market, much more demand than supply in infrastructure.
Mhm.
Okay, so I'm not very concerned about utilizing our existing power assets and convert it to AI. I'm more concerned about the capitalization of growing, because we have to be careful about the dilution.
Mhm.
I had to dilute last year in order to get into a certain balance sheet position that allow me to function.
Mhm.
Now I can function. I can talk to suppliers. They look at the balance sheet. They say, okay, they have a good balance sheet. But 50 weeks ago, I could not talk to anyone. We had no cash. We had no market cap. It's kind of a miracle to go from 50 weeks ago, 80 cents a share, $35 million market cap, to today at 160 million with $80 million cash. It's really, in my opinion, an incredible milestone. And we have a story, and we are executing.
So, and just to recap what you just said, which I found was incredible, you said that you have hyperscalers on the sidelines waiting to jump at this opportunity, which I'm hearing from everyone who owns power, but they're waiting for the execution part. And you're telling me in 2 weeks or a few weeks, we're there, GPUs as a service. It seems like everything's about to come together really quickly.
So exactly. So to be even more detailed on the agenda. So I was in Alabama, as I told you last week, commissioning the site. The site is ready to receive the servers and GPUs from NVIDIA and Supermicro. Today, the racks containing the network, the storage, CDUs, GPUs, memories, is being built in Supermicro headquarters. And I got pictures that I will share with at some point in the next update. And these racks, after testing, because you have to test every GPU 3 days and make sure that every GPU doesn't fail. It's very expensive, as you know. We just invested $20 million in these GPUs, so we want to make sure that every GPU is working. And they will deliver this GPU on site in the next 2 weeks. Then there's a bunch of testing for a week or two, and then we can operate. And we have a great relationship with Supermicro and NVIDIA. We have, for any GPU failure, next day replacement, next business day replacement. So, but they are testing. It's very well done. I'm actually having a great meeting tomorrow evening with NVIDIA and Supermicro to try to plan the future, because we plan to be an NCP partner with NVIDIA. And for that, we need to have more GPUs running. And after, when you become an NCP partner, basically, when a customer buys GPUs from NVIDIA recommend our site.
Wow.
So it's a very good step. You can search it. You'll see NCP partners. It's very important. So we don't see any issue of growing our GPU as a service. There's more demand than supply, specifically on the new chips, the B300 and the GB300. But it's very capital intensive as well. So I have to find the right capital structure to get these GPUs and grow without diluting the company and the shareholders. And that's
listen, I thought this was incredibly creative, what you did. Unbelievably creative. It really was. I mean, I think out there, people just look at the GPUs and they look at the megawatts and they want to provide a valuation. But, you have to raise money to do this. It's capital intensive. And then once you do it right, you make a shitload of money. But in order to do that, you either have to raise money through bonds. You have to bring on big partners. It's hard to get, great people on that are capable of raising capital that are very, very big names, especially as with a market cap your size. Or you got to dilute the hell out of them. And you kind of avoided every single one of these while also giving DGXX shareholders upside to this entity if it really starts doing very, very well, where they're going to own, 55% of it. I just thought it was very creative by you, because that's the hardest part that nobody really talks about. And the fact that you did that is very impressive to me, who's into finance for 30 years and very creative. So very, very good job by you. And I'm looking forward to seeing what's going on in the future. And I guess that's the last question I'm going to have here. Where do you see your company? You said in 10 years, great. Long term, that's what you want to see. But where do you see it maybe in the next 18 months or 2 years? Because it seems to me this is the pivot. This is a transition. This is where everything gets going. So much stuff behind the scenes, a million things. You're traveling. Every time I speak to you, you're traveling all the time, which my, Curzio AI members know. I have your stock in that recommendation. Twitter, we don't report as much. There's a lot of free people on Twitter. But what's the next step for you? Where do you see your company in the next 18 months here? Because it seems like there's a lot of catalysts that shareholders may be very happy about.
So our goal this year, the next 18 months, our goal is to convert a part of our power infrastructure into AI data processing, either colocation or GPU as a service. GPU as a service is a much greater revenues. But to give you an idea of potential revenues, every megawatt of GPU as a service is about $1.3 million a month revenues.
Mm-hmm.
So if we can convert in the next 18 months 100 megawatts, that's $130 million a month of revenues.
It's higher than your market cap right now. Yeah.
So basically, what we expect to happen is that when we execute the initial AI, then we can formulate projections based on our execution, and then we may be paid for it. We may be compensated for it, okay, through our market cap. And when our market cap gets larger, then we have access to creative financing and keep on going. But my goal always is to try to protect me as a shareholder, the largest shareholder, and try to get the most value as possible. I said to myself, it's been 10 years that I'm in the business, privately then publicly. I've been holding on for 10 years. If I can hold on for another 3-4 years, is okay. I will hold on. But I want a big payback, okay, not a small one. So I've been very patient. We went through very hard time, few times during COVID, and we survived. And we always survived for one reason, and one reason only: no debts. Okay, when you start to have big debts, there are companies out there that are very, very big, but their debt ratio versus equity is huge. Massive. And I don't know how they're going to survive, okay? I'm not sure, but we are a survivor. And not only we are a survivor, we are on the right track to become a player in the AI industry. And I think we are well positioned. Our balance sheet is great. I'm very proud of the small team of people that work with us and got to accomplish what we accomplished in the last 52 weeks. And I think, I hope shareholders appreciate that, and they will support me to take us to the next level, because now we are going to the next level and everyone should be happy.
No, that's great stuff. That's great stuff. Well, listen, I know how busy you are. I know that you're traveling right now, and I really appreciate you coming on. A lot of people looking forward to this interview just to get some more clarity. I think you provided that today, and I really, really appreciate it. I'm a shareholder. I haven't sold any shares on this as well. I actually added to my position on this, on the pullback, and now the stock is going back up. But I look forward to the future. I look forward to this execution, and very happy where it is. And thank you so much for coming on. I really appreciate it. This guy's great stuff by Michel. If you have any follow-up questions, let me know. I will say this about Michel. As soon as this happened, I emailed him, and the news, the first press release should have been more detailed. Because I even called him and said, hey, you know what? What's going on here? I didn't think there was dilution in DGXX. The alert didn't say that. But I'm like, what is this new entity? And when I learned about it, I thought it was absolutely brilliant, as I said in the interview. And I thought it was brilliant because I'm very familiar with Oracle. And Oracle, that stock went up tremendously. It's nice getting the orders. But remember, this isn't, I used to own a phone store. And if the sanitation department, the police department, and the fire department came in and said, hey, we're going to start fixing our phone through you every time we break our screens or whatever, and we want to have all these orders and say there's $3 million in orders, I have to go and buy the parts for like $1 million, $1.5 million, whatever your margins are, right? And whatever your costs are. And then you're going to make the margins in between that. And to do that, I would have to raise money. And that's what he's doing. He's finding ways to raise money where he's not diluting shareholders while also be able to keep, I've covered a lot of small caps in my life in 30 years. It's rare when you see, this caliber of people behind him. I mean, Peter Lynch, still a shareholder. Ken Griffin, still a shareholder. Now you got former CEO of Verizon. All right, how do you lock that guy in? This is normal with companies. When you have a small company, you can't afford to pay these guys. But if you have a great enough idea, they're going to come on board. You give them shares. They become advisors or co-founders. So he spun off this division, no assets. You get 55% of it. If it doesn't do anything, it's fine. If it does, great. If they start selling, remember, they're going to be building this stuff and probably selling it back to DGXX at cost. And then they're going to make incredible margins selling all these pods and ARM pods to infrastructure companies, right? And the fact that you have BlackRock and, who's someone on the board from BlackRock, and then you have the former CEO of Verizon on there, these guys pick up the phone once and they're raising $10, $20 million like that. I know, because I know a lot of people like that. A lot of people are R1 subscribers who invest in private, in private securities and stuff. So seeing what he did here, the explanation could have been better, as you could see from the interview. Look, French is his first language, right? So he doesn't, with English. So the communication part I get, and maybe he feels, and I see this with a lot of brilliant people because he is absolutely brilliant, where they think everybody knows everything. And what our job, especially my job doing this, is my job is to break down biotech companies, break down mining companies, break them down so everyone can understand them, because you don't, and I tell us all the time, the mining companies, please don't have your geologist going up there. I say it and doing presentation. I say it to biotech companies, please don't have your science guy going up there, because no one's going to care. They're going to be so freaking lost. You want someone to just explain it in simple terms. And I felt like we were able to do that today, to understand and address a lot of the concerns that, listen, you're not getting diluted. This is very creative. You're locking in two great guys, unbelievable talent that could raise a shitload of money for him. And they're rocking and rolling right now. It looks like, in the next few weeks, next few months, there's a lot going on with this company. Once these GPOs come online, I know from covering this industry, anyone that has power, they don't even have to go to the hyperscalers. The hyperscalers are going to them because there's an energy crisis and they're in dire need of power, right? There's so dire need that they're hiring. They're going to restart 3 Mile Island, which is going to take another 5-6 years. And they don't even know if they're going to get state, local, federal approval. And not only that, then Microsoft announced that they're buying energy 20 years after that, right? I mean, that's how in dire need of power, where Oklo, they don't have scalable technology yet. If they do, the stock definitely is worth its market cap, probably more in the billions. But you could see how even the newest innovations, where Bloom Energy, we have in a portfolio of 500% on that in our AI portfolio as well. Celestica makes switches and parts, and we locked in gains in that company for, I believe, 400% plus gains. So, when I see a company like this and I see the news come out and I see the Twitter, listen, it's fair game if the stock goes down. The stock goes down, you're listening to me, and that's fine. And you could bitch, you could complain, you could yell. That's fine. That's fair game. The pump and dump shit, come on, guys. We got to be a little bit better than that. I haven't sold shares. I still own. I added to my position. I came in with the financing at around 265. So, with a couple of my investors, they gave us $500, $500,000 of that offering, which we took out in 3-4 days. And I haven't even converted those shares yet, right? So that's how I, to know where I stand, I'm a long-term shareholder because I really believe in this and because they have the assets. And I love the fact that he did this, where if you look at a mining company, and let me put this perspective for you, right now, wherever you are, I guarantee underneath you, that there's mining, there's copper, there could be gold, it could be silver that's worth hundreds of millions of dollars. And you're like, holy shit, looking at 100 million. They're not going to tell you it's going to cost you $1 billion to get it out, right? So, it's not just looking at the GPUs and what they're worth. It's how do we limit those costs? What's the best way to do it without diluting shareholders? And he's the biggest shareholder in the company. So he cares the most about this, right? And we got some questions about this. Hopefully we addressed them. But one of the things I want to address also is voting rights. You have to realize, as an individual investor, you don't have voting rights. Okay, it's all bullshit. It's horseshit. Okay, whatever you want. And people are like, well, with the voting rights for this new entity, one, it's a brand new entity you got for free, that we're getting for free. If it does well, it's great. If they spin it out, we own it. You're going to make even more money on it. And they could raise money, sell infrastructure back to GXX at a very, very cheap cost, as you know. And these are two separate entities, right? So, and then it can raise money through that, and which is, going to be non-dilutive to DGXX shareholders, which is great. When it comes to voting rights, even if you get to the large cap level, forget about small caps and mid caps. If you start your own company, what you never want to do is get kicked off of your own board, right? So, I mean, even if they give shareholder rights and everything, and I see this all the time because people complain, and it's meaningless, because even if every single one of you as shareholders said, okay, we want change, it's not going to fucking matter, because one, you're looking at 45% of the USDC is owned by insiders, which are going to vote the same way. And then you have probably 9%, 8%, I think, around there, owned by Michel and his son. So if they're going to vote as at 55%, if they're going to vote on that side, it doesn't matter if all of you choose to vote whatever you want to vote for, a different board member, kick Michel off the board, it doesn't matter, right? And that's how companies are set up, and that's the way you're going to set up your company. So, it's just the way it is. I love when people say, well, we have voting rights. You don't have fucking rights. Your rights and how do you protect yourself is based on if the CEO is in the same boat that you are. Does he own shares of the company? Is he participating in the financing rounds? If not, if he's not writing a check, F him, get out of it. And if they're not doing their job, then sell the shit out of the stock and get out of it. That's your right. But the voting rights, and people all over Twitter going, oh, what the voting rights? You don't have no voting rights. Okay, even if 30 years, believe me, your vote doesn't matter. It sucks. That's the way it is. I'm being honest with you. Okay, I'm not bullshitting you. So forget about that. The biggest part for you is he doing the right thing for his company and for himself, because he's the biggest shareholder in the company, and he's not diluting shareholders. And I think, seeing this pushback, I get it. We're only up about halfway from when it pulled back, because everyone's like, okay, let's wait and see, and I'm still nervous. Well, that's fine. Well, let's wait and see over the next couple of weeks if he follows through. If he does, this thing could really take off. But once they announce a partnership or a tier one guy, these stocks, as you guys know, many of you cover this industry, especially on Twitter, this thing's absolutely going to take off. Okay, it re-rates probably well over $5, much, much more than that, depending on the deal, because now they're in a different class. Like he says, market cap goes higher. You can get more creative with the financing. It's not as dilutive. You have money coming in that's going to be guaranteed by tier one. Again, if you're looking at Google, Microsoft, Amazon, whoever, CoreWeave, Tether. You're seeing any of these customers come in, they're going to be writing a very big check, and they have the deepest pockets in the world, as we all know, and they're in dire need of this energy. They're in dire need of it in order to build their AI models, to go into agentic, to go into robotics and stuff like that, which we're not even talking about the robotics part and how much energy that we're going to need for that. And they're lined up to whoever. I mean, they're on the sidelines waiting. Hey, if these guys could execute, we're signing a check and we're going to lock in. We're going to take all his megawatts from them right away because we need them. So, they're sitting there with those assets. He's working his ass off. Every time I call him, he's overseas. He's going here. He's going there. He's talking to a bunch of people within the industry. And I really like this news. I get it. I understand. One thing I would say, if when I saw the comments, again, I was first pissed. But people, again, you tag in the SEC, like really, like a 20% move in the stock. I'm going to ruin my 30-year career, right? And short the stock right the day before that I put out something positive on it, right? Which I thought was funny. It was a coincidence. But one is the people that are going crazy. If you're going that crazy, it means you own too much of this stock. It's still a $2 stock, right? $2.50. They have to execute. There's tons of freaking risk. It's a reason why it's $2. The reason why it has a $125 million market cap. You got to be very careful. Maybe sell some of it when it does go higher. But if you have too much into it where you're that emotional, and Curzio's an asshole, this and that again, if the stock goes down, it's fair game. I'm the asshole. I get it, right? And don't follow me. And I know that most of the people you followed over your career fucked you. I get it. It's SPACs, and this is going to be the greatest thing ever. And, Wall Street. Wall Street's job is to lie to the retail investor community to get them to buy so they could sell. They want the retail community creates the liquidity for the insiders on Wall Street to get the hell out. And you're going to get it last, right? That's what it is from working on Wall Street. So I know, never trust anyone. Always do your research, do everything you have to do. It's the most important thing, even me. But, again, to say that right away without knowing the facts and knowing it and just taking this news, rightly so. I see that it wasn't really explained well. But to go that far for some of you, and again, that's not any of my subscribers. I reported to them right away. Just to let you know, Michel I emailed him. I said, hey, what the hell's going on with this? He talked to me like 3 or 4 times over the weekend and said he's going to issue a press release and everything. And I said, great. I said, because, shareholders, you don't want to screw your shareholders. These guys are gone. They're gone. These guys are diehards. They're posting on Twitter every day about you guys, waiting for all these catalysts to come to fruition. These are your diehards. And right away he said, listen, I'm at a conference. I'll separate from the conference. A couple of people came up to him during that interview, which we edited, which he had to stop because they didn't know he was doing interviews. So, just really good stuff for him. If you have any other questions, feel free, on Twitter. I'll answer what I can. Again, for Twitter followers, if you really want all the information, everything that I offer for all these AI picks, which we're doing a fantastic job in the AI newsletter. We're kicking ass, which I love. So, and we always highlight our losers if we have losers and stuff. I'm not just talking about the winners, but the AI newsletter has been doing absolutely fantastic since we launched this thing several years ago. Big winners. But that's where, for people that are paying for our services, that's what you should pay for. If you get on Twitter, you're like, you haven't talked about this for 2 months. Sorry, I'm not the free guy that's just going to hand out shit. I like my time. I'd rather hang out with my daughter than give away free information all fucking day. That's just me. But maybe a lot of people on Twitter like that stuff. I do like to share with people. I do like to share with my followers just to show them and saying, hey, this is what we do. And if you want more, then subscribe to my services, right? I deserve to get paid for that since I've been doing it for 30 years, finding these stocks. And that's why my subscriber list isn't pissed, because they're in at $1 and change, where a lot of people are buying this at $4, $5, $6. And as we're highlighting this and doing interviews with Michel at the stock higher price and stuff like that, we just wanted to know what the next step is. And, Wall Street Unplugged podcast is for free, which I've been doing for 15 years. But to suggest I throw all that away for a 20% decline in the stock and post it, something positive, and the next day this is going to come out. I mean, come on, guys. You guys are better than that. Just if you're that emotional about the stock, again, I've been there and done that. I'm not saying it's like I'm some kind of genius, because I lost money. I got fucked by Wall Street. I've been there. I've done that. That's why I do it. That's why I do this now. I don't have to do this. I can retire. I have enough money to retire. I don't have to do this ever again. I enjoy this. I enjoy helping people. And I get when people are pissed off. And if I'm losing your money, you have the right to be pissed off. But don't ever suggest that I'm not on your side, because I am on your side, because there's not a lot of people out there that are. And that's why we have a big following, why traffic is increasing across our platforms, why we're increasing our subscriptions and revenue at Curzio Research very, very fast, is because, people don't do the right thing. We always do the right thing. And the right thing was to do this free interview and take my time to do it, to give that information to you guys. So hopefully you appreciate it. If not, that's okay. But questions or comments, hey, go on Twitter. I'm on there. But most of our good stuff is always going to be for our paid subscribers, because that's the way it is, and that's the way how you should always treat your business. Okay, so I'll put back to you guys soon. Any questions, comments? Again, feel free to email me, frank@curzioresearch.com. Take care.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.